You know, in the diamond market right now, not everything that glitters is holding its value. The industry is facing this really weird, contradictory story. While the sparkle is definitely still there, the ground beneath it is shifting like crazy. And we're going to dig into why.
So here's the central mystery we're unpacking today. How is it possible that one part of the diamond market is basically in a free fall, while another part seems to be doing just fine? It's a real puzzle, and it has everyone from dealers to buyers scratching their heads.
Okay, so the key to understanding all of this is to stop thinking about the diamond market as one single thing. It's not. Right now, we're really looking at two completely separate markets, each with its own story, its own pressures, and honestly, its own destiny.
And the split, it really all boils down to one simple thing: size. If you're in the business of larger stones, we're talking 1.20 carats and up, things are pretty stable. Demand is solid. But for smaller diamonds, anything under a carat, well, it's a whole different world. The prices aren't just a little soft, they are plunging.
Now look, this isn't just some vague industry feeling or a hunch. It is backed up by cold, hard data. So let's follow the numbers for a minute and see just how deep this division really goes. So this data comes from the RapNet Diamond Index, or RAPI for short. The easiest way to think about it is like the Dow Jones or the S&P 500, but specifically for diamonds. It tracks prices on the world's biggest diamond trading platform, so it's a super reliable benchmark for the entire industry.
All right, this table right here, this tells the whole story of 2025. Just look at that column on the far right. Prices for the smaller guys, the .30 and .50 carat diamonds, they absolutely plummeted, down over 20%. Even 1 carat stones dropped almost 10%. But then look at the 3 carat index. It's almost totally flat. The data makes this split impossible to ignore.
Let's just pull out the most dramatic number here. Half-carat diamonds lost over a quarter of their value in just 1 year. I mean, let that sink in. A 26% drop isn't some minor market correction. That's a market in serious turmoil. And this graph just makes it crystal clear. That yellow line, way up top, that's your 3-carat diamonds, just cruising along, holding steady. But then you see the blue and green lines for the smaller stones. They are just taking an absolute nosedive. That growing gap between the lines, that's the market literally pulling itself in two different directions.
Okay, so we've nailed down what is happening. But the big question is why? Well, the answer is this complex mix of global economics, trade policy, and even just simple geography. Let's take a look at how these pressures are playing out around the world.
If we do a quick tour of the major markets, it starts to make sense. In the US, people are still buying, but they're being specific. They want those larger, more stable stones. Meanwhile, India, which is this massive hub for polishing smaller diamonds, is getting hammered by US tariffs and weaker demand at home. And China? Once a huge growth market, their appetite for diamonds is just low right now.
And that brings us to, well, the other elephant in the room. This quote from the Rappaport report is crucial. It really signals the pivot from all those global market pressures to the other huge disruptive force: technology. The rise of lab-grown or synthetic diamonds is causing some real nervousness.
Yeah, this technological disruption is an absolute game changer, especially for that part of the market that's already under so much pressure. You see, lab-grown diamonds aren't some little niche product anymore. They are a major, major competitive force.
And here's where the battle is really being fought. Synthetics are going head-to-head with a specific category of natural diamonds. We call them SI clarity, which just means they have slight inclusions, tiny little internal flaws. And the impact has been massive. Prices for these natural stones dropped over 24% last year. For fashion jewelry, retailers are realizing that a visually perfect lab-grown diamond offers incredible value. So as we're looking ahead into 2026, you can imagine the entire industry is kind of holding its breath. There's this fog of uncertainty hanging over the market with several huge factors that could push things in pretty much any direction.
So here are the big things everyone's watching. There's a potential trade deal between the US and India that could ease the pressure on smaller stones. Then you have the sale of De Beers. I mean, that's a legendary name, and that sale could totally reshape the industry. On top of all that, you still got Russian sanctions, the relentless competition from synthetics, and even the high price of gold, which makes the final piece of jewelry more expensive. It's a lot to juggle.
So what's the big takeaway from all this? The most important thing to understand is that the division we've been exploring, this split market, it isn't some temporary blip. All the signs are pointing to the fact that this is the new reality, at least for the foreseeable future. And this all leaves us with one final fascinating question. For centuries, a diamond's value was all about its natural rarity, its timeless tradition. But now that technology can create a near-perfect alternative, what does that value truly mean? As these two massive forces, tradition and technology, collide, the very definition of a diamond's sparkle is being rewritten right before our eyes. And it's going to be fascinating to see what comes next.